From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming March 29th Forex session in the euro dollar. As you can see, we had a positive session on Thursday, and this would have been predicated upon a couple different things, really. There is the cluster down here that we hit right around 127.50, but what was probably more important would have been the fact that the Cypriot banks have reopened without much in the way of a run of the bank. Um, there were some people standing in line trying to get their money outside of the banks, but a full scale run certainly wasn't happening. Capital controls alleviated fears of a lot of money leaving the country, and that being said, the market probably had a bit of a relief rally more than anything else. You will notice, though, that the 128.50 level offered resistance. I think that will continue to be the case going forward. That every time we rally, there will probably be a little bit of a sell-off shortly thereafter. I also believe that the 130 level now should offer quite a bit of resistance, because when you think about it, even though Cyprus will be on the back burner, people in other peripheral countries will have to be asking questions of their banks. If that's the case, um, imagine having deposits in a Greek or a Portuguese bank. Do you really want to keep it there when you can keep it in a German bank? A lot of times just across the street. Large funds in Europe have been pulling money out of the continent for a while now, and I expect that to continue. So really, anytime we see a pop, it's probably going to be a selling opportunity as far as I can see, at least for the short term. Eventually, the market will forget about all things European. It tends to, and then we'll have to revisit this later again, of course. But it just comes down to what it's focusing on. I believe that 130 will be the cap for this market going forward. We are getting fairly close to the beginning of summer. We're probably 7 weeks away from that, but wouldn't be surprised to see us bouncing around between 127 and 130 for a while. Selling the rallies will work, in my opinion, but resistive candles will be necessary. This will be a headline driven market, as it has been lately, and more of this just absolute massive volatility and nonsense will probably be in store for the rest of the year.